What's going on? This is not financial advice. Do your own research, man. We're gonna be checking out three stocks that I'm watching, and we're gonna be talking about indicators. First stock I'm watching for the week is Meta. I do like how Meta's looking. The gap fill on the downside. Continuation. If they break below 173, they pushing back down to 160 area, 162. That'd be the first area that I'm watching. The first area of support is probably 169 to 167, somewhere in that area, in that zone, probably 170 the whole number. And then we got AMD. I'm looking for, if they continue to break beneath 80, they're looking to look for a push down back down to 78. Possibly if they lose 78, we could come back down for a gap fill at 75. So those are two major levels that I'm watching on both of these plays. And then I'm watching Apple. If Apple could hold 150, they're breaking back above, pushing easily back up to 153 to 155 area. If they shoot straight through that zone, I'm expecting to come back up and test the highs at 157. So these are definitely some ones that I'm watching for the week. So let's just get into these indicators, man. So we're gonna go to the SPY because that's the most simplest thing. And the reason behind why all these indicators don't really work in the long run is because, for one, um, they're indicators. They can't tell you how to read the chart. So they give you an indication in confluence with each other of where the market could potentially be going, but it's not a winning strategy long term. So, all right, we're gonna get to kind of zoom in. It is okay to use some indicators in confluence with each other, like moving averages, simple moving averages, exponential moving averages, and the main thing that will help you with the market is support and resistance. So that's the main thing. Support and resistance are usually in trend lines. So trend lines, break of trend lines lead to retest in whichever direction, but you have to give it time for the trend line to develop. So I'm gonna give you this example of using the indicator. So you can see this spike up. This is where the market was last week. So they were in this range. You can see these indicators, they're bouncing off of this moving average. When the price is going up. So they're bouncing off this moving average, but it's not a for sure thing. So just to zoom in on this, we can see how this indicator is giving us an idea of where the market is going. So now we're way up here. So we're buying up here, but the indicator is way down here. So it's lagging, of course. So with price actions, supply and resist and demand, support and resistance, however you want to put it, that usually gives you an idea how the market is going to react off these levels. So indicators, they're good short term. I'm gonna give you a perfect example of a channel. So we can use these channels. These are lines or geometrical patterns that the market uses to identify the direction. So as you can see, this is a spike and a channel. So this is a zone that gets confirmed as prices move. So we're looking where price is going. So this would be yesterday's uh, zone down here at 41.28. So price came up here, they were in this range. Price came up here and they fell. And then they went into a channel. So the immediate price um, will be the last trading price. So the last low or the low of the day for this last trading session would be down here. So this would be where price could be going, right? So this was the last trading session, as you can see right here. This was the low of the day. They just trended up for the entire day. and then they came back down. So this is a range. All right. So if prices is spiking down and they're in the channel, the 99% of the time they come back down to the low of day or in this area, in this region, usually. So a spike and a channel. This is a trend line. So we got a first touch and we got a second touch. So this is 3 touches. So you know the trend line is valid. So price fits nicely in here. And usually an overshoot of a channel leads to a reversal, depending on the day. So they have regular trend days. Overshoot will lead to a reversal or correction. Downtrend, a spike down, and then now we're in a channel. So all these are potential trades to the downside. All these are potential buys, but we're looking for a downtrend because it's a spike and a channel to the downside. So we're trying to short the rallies. All right. Simple price action. Not a lot of indicators, just trend lines. And we have another day here. I'm going to show you another example of a trading day. So we got the high of day, which is here. This is the first area of support. Resistance. It's the first area of resistance down here. So support up here, and we got the resistance. All right. So this is where price was at. So right here. There's no indicator that can give you an idea of where price is going if they're going sideways. So this is the indicator in here, this moving average. But they're swinging back up and down over the moving average. So there's nothing that can show you where the price is going. There's no indicator for that. Yeah, they can be oversold or overbought, but the indication of where price is going is simply the resistance and the support. If they're inside in the middle of this trading range, you don't know. This is indecision. They don't know which way they're going to go. But usually they don't come back and down and test the lows. It's not a healthy trading range. So you got the high of day, we come down to the low of day. So a strong push up back above. If you want to look at a smaller time frame, it'll give you a little better a description of what price is doing. Oh, that's the wrong chart. I'm gonna go back to where's the trading range. Here we go. Right here. And then we're gonna go to a smaller time frame. Here we go. Oops. All right, here we go. So we got this is the trading range day. So we got a tiny indicator in here. This exponential moving average that will be following price. All right. So we got the high of day. This is the resistance zone. So that's the first target. The second target would be down here, which is the low of day. All right. So we got 2 legs down. We know the market likes to move in twos. So we got 2 failed attempts, strong push above this indicator, but it's a trend. So it's a trend line. So if we got a channel going here, we can see where price is valid. So this is a valid channel. If we just use these trend lines, we don't really need any indicators. Just we have an idea of where price is going because they're reacting in an uptrend. So price is moving in an uptrend. We have an overshoot, leads to a correction, and it's strong another push up. All right. So then they came back to the same level that price was at. So we got a high, another attempt to push out, and we got a strong push down beneath this indicator, this exponential moving average. And then you see how the price closes beneath this indicator. But we can't completely rely on that. We have to figure out where price could be going because they could bounce and keep going. So we see a strong push down, and then we got a correction. So a nice trend, a downtrend. So we're going to draw this trend channel. All right. So price is fitting nicely inside this trend channel. All right. Look how price fits inside these trend lines. All right, we don't have to draw patterns because we're not pattern traders. We don't have to draw patterns because patterns don't always play out. But trend line, we know trend line is a for sure thing. This is a trend line. So we got one touch, two touch, we got a lower high, and a third touch to confirm this big bearish bar. So we got a nice downtrend. You could scalp these all day if you just let the trend develop. All right. So no indicator is 100%. Only thing that's 100% is price action. No trading strategy is 100%, but price action is the simplest way. So supported resistance levels off of these zones on the daily as potential trading zones. So off the daily and off the weekly are the strongest support and resistance zones that you can use to trade off of. Right. So this is just a little simple price action to show that indicators are not 100%. You cannot completely rely on them. Only price action. I'll see you guys tomorrow. Out.